Okay, sorry about that, everyone. I don't know what has happened ever since the hurricanes. My internet has been spotty, so maybe something got shook up. So I apologize for that. So with a short sale, and we're going to go through all of this because there are some key things you need to know. But one of the things that lenders look at, and like I said, I worked in foreclosure for a long, long time. And what the lender really is concerned about is how is that going to affect their bottom line? They've lent money. Is a foreclosure a better option than a short sale? Foreclosures may take less time than a short sale. So all of that's taken into account when a lender decides if they want to do a short sale or a foreclosure. And it is really truly the lender's decision. It also has to be the seller's decision too. But the lender's going to weigh all of those options. A foreclosure can cost quite a bit of money because it is a lawsuit that has to be filed here in Florida. So it's a legal proceeding. It's, you have to go to court, you have to file motions, you have to hire an attorney. So is that a better option and a quicker turn time than doing a short sale? So let's go through sort of all the elements. One of the things too is, which a lot of people assume with a short sale is, oh, well, I've done the short sale, I'm good. Lender got whatever money they have, I can go about my merry way. There's recourse and non-recourse loans. If you have a recourse loan and you are doing a short sale, the lender can collect that money that they were shorted, and they get it through a deficiency judgment, and they do go after sellers if there is a recourse loan. So these are all these kind of elements you have to know before you even get involved in a short sale. And that's also going to, like I said, make the lender decide what they want to do. There's also these things called potential short sales. And that's where you, as a listing agent, looks at the purchase price and looks at what liens are on the property and think, ooh, this isn't going to be a straight sale. Could become a potential short sale if the seller can't bring in money. So why are we talking about short sales now? Look at our economy. So we had COVID. I know that's shocking for a lot of you, but we did. And as part of the CARE Act, which was the COVID Act, to kind of, because so many people were unemployed and economy was kind of getting messed up, the U.S. government created the CARES Act, which provided an ability, if you had a federally backed mortgage, so Fannie Mae or Freddie Mac, USDA, VA, FHA loan, then you could get a mortgage forbearance. And a mortgage forbearance just stopped your payments for a set period of time. It could be 3 months, it could have been a year. Typically, they're around 6 months to a year, where you didn't pay your mortgage. Now, interest still accrued, and that amount that you didn't pay, you got a check or a bill for at the end of that forbearance period, and that money is due and payable at that time. So now you've got people that haven't paid a mortgage for a year because they may have not had a job, and now they have to pay that money back and they can't. So that's where we might see some uptick in short sales. And really that CARES Act, I mean, it was a Band-Aid, great idea, but once again, you do a forbearance, you still owe the money. It's not forgiven, it's just forbearance. So that could be something that we see. Like I talked about earlier, we had high purchase price sales over the past few months, and potentially with how things are going, we might see the market drop. We're definitely going to see it with condo units, with the new condo laws that took place, where now if you're building 3 stories or higher, you have to get a structural engineer report. And if you don't have the proper reserves for repairs, you can get fined. And so now the rule is you have to have money in reserves, which means higher special assessments, potentially higher association dues or whatever it is. And so you might see people trying to get out of those situations where they bought high and now the property is valued less. So that's all the kinds of things that could potentially lead to short sales. My advice to you is to just, especially in this industry, in this market, is to get on different economic outlook kind of webinars. Fannie Mae does one quarterly. I think they actually have one. I think I'm listening to one tomorrow or today or something. I don't know if it's Fannie Mae, but find out. NAR or Florida Realtors, get on those economic outlooks because you're going to get an idea of where we are. But this is a great class right now to start thinking about how do you do a short sale? What's it all about? Because we'll probably run into these. All right, who's a candidate for a short sale? It's a homeowner that's experienced economic hardship. This is where you don't have a job and you can't pay your bills, fall behind on your payments, or you have an unplanned forced career change or a new job paying them substantially reduced income. Now that is something we saw as a result of COVID as well. Just things happened, businesses went out of business. Back in the foreclosure crisis, I worked in Detroit. I'm originally from Michigan, so Detroit was our home base, and we had automotive, obviously, in Detroit. And we would see executives at like GM that were making hundreds of thousands of dollars lose their job. So with their hundreds of thousands of dollars, they bought $1 million plus homes. When they lost their job, they weren't getting a new job for hundreds of thousands of dollars. They were getting a new job for starting salaries, and they couldn't afford their homes. So these types of situations would have been an economic hardship where they could no longer make those mortgage payments. And the home value is less than the amount owed. So that's the key. You have to be some sort of economic hardship, and the mortgage is more than the property value. Now, there are some elements of a successful short sale, and I highly, highly recommend National Association of Realtors has, first of all, they have a certification program, which we'll talk about, the SFR, for short sales, distressed properties. But they also have a workflow, and I believe I have the link on the slides, which, like I said, I'll send to you, of the whole short sale process, what you need to know as a real estate agent. So I took a lot of that, as well as some other things, just from the title industry, et cetera, that you need to know. But elements are going to be the property is worth less than it's owed, obviously. Seller has some hardship that makes it impossible for them to keep up with the payments of the property or to keep the property. The seller is cooperative and willing to work with a real estate broker to package the short sale. There is a lot of paperwork, and there's a lot of things the seller has to provide. So there has to be a willingness by the seller to even go through this process. Because a lot of people will just like, listen, I'm just going to walk. And the lender is willing to go through this process. So both the lender and the seller have to be willing to do this. If you've got a seller that's not going to be cooperative, the lender is going to be like, listen, we'll just go to foreclosure. It can get pretty tough. And there's, like I said, tons of paperwork. So the elements are the properties listed, appropriate caveats, protections for the seller, properly priced and effectively marketed. The lender's presented with an offer that's accepted by the seller, along with a completed short sale package, a narrative explaining why the short sale is necessary and desirable. And then the lender approves the offer and escrow closes as usual. No proceeds go to the seller because the house is underwater and the property or the mortgage is more than that property value. Now, this is this seems like the very easy way to do a short sale, but of course there's a lot of glitches. And so we'll go through that. So getting started, if you're a listing agent and you see, this could potentially be a short sale, or the seller's talking to you about it as a short sale, how much is owed on the property? That is the first thing you need to find out. Is the seller in default on mortgage liens, taxes, or association dues that could cause a foreclosure? Are they already in foreclosure? And you want to get get documented proof. So here's the thing. A lot of people don't know that they're in default or they're heading towards default, bearing with the ostrich with the head in the sand, or they're just in denial, period. And so asking for like, hey, can I get a copy of your mortgage statement that shows me exactly how much you owe on the property, if there's any late payments, delinquencies, etc. And then obviously you can use that to determine, is the mortgage more than the property value? Or even if they're in delinquencies with their mortgage payments, has a mortgage foreclosure been started? Property taxes as well. Are there tax lien certificates? All of this stuff is public record, by the way. I mean, the mortgage, the foreclosure is public record as well because it's at the court, but ask for that mortgage documentation. Do a search of the assessor's office. Get maybe an estoppel letter from the association to show what's due and payable. Because if there's a foreclosure actually happening, whether it's a tax foreclosure, condo foreclosure, or mortgage foreclosure, you're trying to do a short sale, you can really mess things up. With the foreclosure, mortgage foreclosure in particular, one of the things that is recorded is a lis pendens. So it puts everyone on notice that litigation is pending and a foreclosure action is happening. In some cases, a short sale transaction is a race with the foreclosure transaction. And we see that happen. And we're going to talk about the lenders and kind of how they're set up and why this could be a major issue. If there's a set date for the final foreclosure, we may have to contact the judge and ask them to hold off while we work through a short sale process. And you'll also have to contact the foreclosure department as well. So here's the note on lenders you need to know. In a lending institution, there are different silos. And silos means they do not talk to each other. One is the foreclosure department. The other is the loss mitigation department. The foreclosure department is what it does. They do foreclosures. The loss mitigation department does short sales, loan modifications, deeds in lieu, all of those, mortgage forbearance. They do all those things to kind of try and help a borrower out, mitigating their loss. Foreclosure is foreclosure. These two departments do not talk to each other. They do not share the same information. They do not share the same platforms even sometimes. So if you're in the middle of a foreclosure and you're trying to do a short sale, that loss mitigation department where you're dealing with the short sale is not communicating that with the foreclosure department. There are two separate things they do not share. And that's where we see people get burned because like, oh, I thought the lender was talking, or that the lender, the loss mitigation department was talking to the foreclosure department and telling us we were doing a short sale. No, they don't talk to each other. So that's why both the loss mitigation department and the foreclosure department have to be communicated with, that there is, that we're trying to do a short sale. So other questions to ask: is a seller aware that there may be insufficient equity? A lot of people think their home is worth much more than it is. And this goes to, you go on Zillow and you see your property value or true estimate or whatever it is. And you're like, oh yeah, that's what I'm going to get for it. But it may not be the case. You want a careful comps or BPOs using the most current comparable sales and be realistic about the value. One thing when dealing with a short sale with a lender, it is being transparent and honest. If you're trying to do something that's, I don't want to say nefarious, but something that's going to affect the lender negatively, this isn't going to work. Then remember that recourse or non-recourse loan. If it's a recourse loan, the borrower retains personal liability for any deficiency after a sale or foreclosure. That means that I had a $300,000 mortgage. My property is worth $280,000. We sold it for $275,000. The lender can collect that $25,000. If I don't pay, it's a deficiency judgment. And that means that judgment gets recorded against me and any property I own, so that if I wanted to go buy another property, I have to pay off that deficiency judgment. If I want to sell another property, I have to pay that off. So keep that in mind. You just don't get off scot-free. Only if it's a recourse loan. So that's something you want to find out early, because if a seller's like, I'm going to have to pay back $30,000, I'm not even going to bother. But they might I'll tell you right now, in my experience, loss mitigation departments for short sales will do a deficiency judgment. Foreclosure departments typically don't, because it's kind of bad press. They've repossessed your home, unless they find out that you're doing a foreclosure and walking away from your home for, because you're like, I just don't want to deal with it anymore. There's a bunch of different things, but you have to find out what's recourse or non-recourse. You can just call the lender and ask them. It should be in the paperwork, but of course, no one probably has their paperwork anymore, but you can call the lender and be like, do I have a recourse or non-recourse loan? Because that's going to make a difference on whether the seller wants to go through with it or not. Okay, the negotiation process. Always good to get rid of written authorization from seller if you're going to be communicating with the lender, so that because they're going to want to see that you're speaking on, that the seller's authorized you to speak on their behalf. With the lender's loss mitigation department, there's a workout or short sale specialist. Questions you want to ask. We're interested in doing a short sale. Here's our projected time frames. So they'll want to know that. And then what their current turnarounds are. Just another note on lenders. Lenders they'll have a short sale department, but it's not fully staffed until there are a bunch of short sales. Same with like foreclosures. Everyone's pretty quiet right now, but as soon as if foreclosures picked up, they'd start hiring people. So what are their current turn times? If it's just, not a lot of short sales happening, might be quicker. If they have a boom, they're going to be hiring people. It's probably going to take longer. So these are questions you need to ask, because if you're the listing agent and you finally get a buyer to buy a property that's a short sale, if the current turn time is 90 days, is that buyer willing to wait for that? There's a borrower approval package that needs to be completed, and we'll look at a sample one. And then if there's any programs or incentives, you need to ask for them. Sometimes, they may be offering, just like under the CARES Act or something like that, there may be some sort of program or something along those lines that can help the seller out. So the borrower approval package typically has this information, and it's going to vary by the lender. Every lender will have on their website, like if you did, you could do a search on like short sales or loss mitigation or something, and they'll give you like the information what you need to do. You always want to call though and get a complete list. And here's the thing: when you're putting together a package, you don't want to send it piecemeal. You don't want to send the 1003 over there and then the next day send something else. That's not how it's going to work with the lender. You gather everything and then submit it, because if something's left off, it's just delays and delays and delays. So this is like we were talking about the elements of a successful short sale. So what you're going to see is financial statements, hardship explanation, or letter that the seller writes. Hey, I lost my job. I can't afford this. The property's not, I'm paying so much on this mortgage. The property's not even worth that, whatever. Checking and saving accounts from all the borrowers. Some lenders will require 6 months of those. There's a 4506 T, so that they can get the last 2 years of tax returns. Proof of all sources of monthly household income, pay stubs for the last 30 days, profit and loss statements, leases, Social Security, pension. Anywhere that money's coming in you have to show proof of that, so that the lender can determine, well, with all this money, you should be able to afford this mortgage. And then any other documentation that you may feel is relevant to this particular situation. Gather all of that. That's the borrower approval package. That's what needs to be submitted to the lender. The property approval and the contract, there has to be a signed and ratified listing agreement. The sales contract is signed by the buyer and seller, but it has to be approved by the lender. So remember, in any time you're dealing with a distressed property, the lender that has the current loan really drives that transaction. They want to approve everything because they're taking a loss. It's the same with REOs. Estimated settlement statement, which Consumers First would prepare. Proof of buyer's financing, a pre-approval letter. Are we going to go through this whole process and the buyer can't get a loan? And now could have foreclosed 30 days ago. And now we're sitting here with this property that we have to go through the whole process again. Lenders want these homes off their book. Another note on lenders is that they do not want your home, period. They would much rather have you pay your mortgage, pay it off, and everyone walks away happy. You start working with distressed properties, it gets very much a business to consumer transaction where they are just trying to move an asset. So always keep that in mind when dealing with distressed properties. Copy of EMD, the BPO or CMA, the title commitment, because they want to see what liens are out there. If there are junior lien holders, here's another glitch. A junior lien holder has to be willing to accept $0 or whatever amount that first lender will allow them to get. So junior lien holder, second mortgage. You have a first mortgage for $300, second mortgage for $20, properties worth $280. That second mortgage isn't going to get anything. The first lien holder, the first mortgage, may be willing to give a couple $1,000s, but that's it. They're not going to get a full payout. So getting confirmation and approval from a junior lien holder that they're willing to accept $0 to nothing or $0 or much less than is owed to them is going to be key. Not, obviously, most people, well, not most people, but if you have one mortgage, you're dealing with that one lender, it's a lot easier. We start getting people that have other interests in the property, really hard to get a short sale through. So a title commitment is a good thing to start with as well. Consumers First can actually do just a property report to see what liens are on the property. Because here's the other thing, you could be asking the seller, what liens do you have on the property? They're not going to have a clue. The lender can do one of several things in response to that package. They can ignore the offer, and this happens. A lot of times they're just like, we are already in foreclosure, we're just not going to deal with this, depending on the lender. And it's really one of those constant calling and trying to get in touch with somebody. They can refuse it. They can ask the seller to bring some or all of the shortfall to escrow, which we do see, especially if it's a recourse loan. Typically, it's the first response, and then that's from the lender, and that's where you go back and you're like, well, the seller doesn't have any money. That's where we're trying to do a short sale. Or they approve the offer. So remember, having the complete package put together can actually speed up the process. And making sure you have the correct contact information for someone at the lenders that you can deal with directly. What happens on the lender side? The bank acknowledges receipt of the file, negotiators assign, they order a BPO, their own separate BPO. That's why it's so important to be honest, transparent, and realistic. Second, negotiators sign, the file sent to review, they request for an arm's length affidavit, which means that the seller and the buyer are not related, because they're not going to do a short sale then. They'll just let it go to foreclosure, because that just means I'm buying it. My mom's wants to do a short sale. I'm the buyer, and I'll just put my mom back at the house. That's cheating the bank. And then the bank issues a short sale approval letter. If the lender approves, it'll be typically in the form of a demand to escrow, to the effect that the lender will accept no less than X dollars in proceeds no later than X state. Remember, the lender is driving this transaction, the seller's lender. And the lender may also attempt to reduce your commission, which they typically do by 1 to 2%. What about the seller? There is a negative impact, but it's less than foreclosure. So when you go into any sort of default, it will show up on your credit report as a default. How the lender reports it, though, can affect your credit score. and your ability to get loans in the future. If it's a full-on foreclosure default, it's going to be recorded as that. It's really going to be hard to get a loan for the next 7 years at least. If it's a partial default, that's how they report it for a short sale, or even other loss mitigation efforts, then it's still on your record for 7 years, but you may be able to get a loan from another lender in the future easier than you would if there was a foreclosure. They'll have to adhere to future lender guidelines before purchasing a new home, and there's tax implications because the seller is making a profit in a short sale situation because they're not paying off that full amount of mortgage. So that money that they've been, that, you know, they don't have to pay back. So $300,000 mortgage, 280 property. That's what, you know, we sold it for 280. That $20,000 is going to be taxed as a gain to the seller. So if things to consider, remember, you have to have a willing seller. Your seller really should be talking to a CPA to understand what those tax implications are. How do you make a short sale more appealing to a lender? It all comes down to money, it's economics. You have to provide hard numbers to show that the amount of money a bank will realize in the short sale is better than the amount it may recoup from foreclosing on the property and selling the property as an REO. It comes down to time and money. What's going to take less time? What's going to cost less money? Banks don't want your property. And a short sale is not, that may not be the option for them. Depends on the property. They could potentially, go through foreclosure, sold to a highest bidder if it's something that is a desirable piece of property, and then they can recoup more money back. So these are all the things you have to think about when you're dealing with a short sale. Challenges, like we said, reduction of the commission, 1 to 2%. If there's a rapid increase in the number of short sales, the system may get bogged down. Remember, they don't have a whole staff of short sale experts right now. They hire them as need be. And a lot of them have never worked in the lending industry or real estate industry, period. So they're reading off a script and it can be a mess. So lack of experienced staff to process the short sales. And that's just the way it is. I don't blame any company that doesn't, we're fully staffed waiting for foreclosures to come. It doesn't make sense. Not good business decisions. So they hire when they need to. And then you have realtors with limited experience in short sales, have never dealt with a short sale, and they don't understand the process and why it takes so long. And, the deal could fall through. Or you have a realtor that's on the listing side and they're trying to do a short sale and they don't understand the whole process. So if someone is approaching you like, hey, I've got a short sale, can you help me through it? You need to get the education piece down because it's going to make or break the deal. There's an absence of a uniform process and application. Every lender is different. And that is something across the board. I know, like even Fannie Mae and Freddie Mac are trying to make universal loan closing instructions. It's really hard because lenders want, they have different processes, they have different rules. So each lender is going to be completely different. The second lien holder, so you have a second mortgage on a property. Remember, they have to take $0 or a greatly reduced amount. And that's all at the whim of the first lender. And the second lender doesn't have to agree to it. That's where sometimes if you have a second lender, the first lender will just say, we're going to foreclosure because we're not going to pay this guy off. He's not going to approve it. It's a faster process to go through foreclosure. You have buyers walking due to difficulties with unresponsive lenders, lost documents, inaccurate or unrealistic value assessments, and long processing delays. This is, like I said, it can be a long, messy process. And that's where buyers are like, I don't have time for this. They don't understand the process. So whether you're the listing agent, buyer's agent, educate yourself on this. If we see these increase, National Association of Realtors has like written out everything you need to know about how you report this on the MLS, because it is a little tricky. So you have to have the ability to disclose any possibility of a short sale to other MLS participants, but you want to make sure, but you're not required to communicate to other realtors how any lender mandated reduction in the gross commission will be apportioned between the listing and co-op brokers. So you have to be very careful in how you report this. Should be in the confidential remarks as soon as you know about the possibility of a short sale. You cannot, the whole point is you cannot compromise the seller's chance of getting the best price possible for your home by disclosing the seller's distressed condition too early. So if you think this property could potentially be a short sale, you have to be careful about, alerting that to everyone, because the seller still could potentially get more money. There's, like I said, NAR has all the guidelines on it. Florida Association of Realtors, they have their legal hotline. You can call them as well if you do have questions like, hey, this is a situation, how should I be showing this? But, be that transparent, open, honest too. Other consideration, can be potential for a lot of fraud. There's always fraud when we're dealing with distressed properties. There's always fraud in real estate, but especially with distressed properties. Some of the things we see are kickbacks from secondary lenders, from the buyer or realtor not disclosed on the settlement statement, which if Consumers First knows that there's payments being made, it's all going on the settlement statement. That's their protection. They get audited by us at Fidelity as their underwriter. And if there's checks and stuff that are being sent out and, things are kind of behind closed doors, it doesn't work that way. We are an insurance, we're providing insurance, and we're heavily regulated. And if there's anything like that, everyone's going to lose their license. So know that. Flip transactions. Now, this is where Fannie and Freddie will put on the face of the deed when the borrower, if the buyer is it either in the REO or on a short sale, that they cannot flip the property for 120 days. Because you're buying a distressed property, the bank is taking a hit. And if you go in and you're like, yeah, we got it for 280, but it's really worth 350, or I'm going to go put a couple things in, I'm going to flip it in 30 days. That can be considered fraud. So not every lender cares, but I can tell you right now, if it's Fannie or Freddie, they do. And it'll be in the contracts and stuff. Non-arm's length transactions, that just means a relative or someone related to you is buying the property in a short sale, which is not, that's considered fraud as well. I've seen people actually create a shell LLC, and that shell LLC is the buyer, but who's the member of the LLC? The seller, or a seller's relative. A lot of people used to put their wives or husbands on as the member of the LLC. They catch on, and that is fraud. Funds between transaction parties, we talked about that. Occupancy, a lot of times there might be a requirement that it's an owner-occupied property. Just once again, depends on the lender. So how do you get ready for this? Educate and prepare yourself. Ask your broker if your company has policies and procedures regarding short sales. Know the laws, procedures, and timelines regarding foreclosure. Foreclosure, like I said, the lender has to sue the borrower and take them to court. So it all is going to depend on whatever county that court's in, what their docket's like, how backlogged they are. But those are all things you want to know about, because you really should understand the foreclosure process here in Florida, because that is going to be part of your negotiation. I've got, here's the cost of the whole foreclosure process, timelines for this county versus if we did a short sale. There's most up-to-date material on short sales like NAR or Florida Realtors Association. If you Google short sales in Florida, there's a lot of junk out there, and people write things that, kind of get confusing. Go to the horse's mouth, go to a trusted source. Or you can go to something like, if you know other realtor associations, a local board, they might have information. Arm yourself with as much info as possible, especially what's going on in the economy. Florida licensed real estate broker is authorized to prepare a real estate contract, but you're not allowed to prepare other documents that finalize the transfer of real estate. That's just the rules. The short sale certification for the realtor, the SFR. This is under NAR. I think it's $75, but it's this designation you get that you can add to your signature line, and it's nice if you have an SFR, especially if you want to get into the REO game, because lenders are going to want to see that you have experience and knowledge about distressed properties, because it's a different animal. And same when you're negotiating with, and I don't work for NAR, so it's not like I'm promoting anything, but I just think when you are dealing with a lender in a short sale process, and you're like, oh, I have certification in this, I understand, it's going to make the process smoother. Plus, you have the education piece. So just know that they do offer that. There's the workflow on NAR, which is fantastic. Like I said, it's several pages long, and it goes through each step and what you need to know as a real estate agent. There are other options besides short sales. You can sell but bring cash to close, and that's what I actually, when I moved out of Michigan during the whole foreclosure crisis, and I was, luckily, my house did go underwater, but it was only a couple $1,000, and that was like, I'm bringing money to close because I don't want that hit on my credit, because I know I'm moving. Well, at that point I was moving to another state, and I was going to buy a house, and I wanted to be able to get a loan. So if you have the means in order to pay it off, I mean, maybe you can borrow money from a family member, something along those lines, or hopefully you have some money. It's a lot. It's just a better, that mortgage gets paid off, everyone's happy. No hit to your credit report. Loan modifications, that's also through the loss mitigation department. Same kind of process, though, same amount of paperwork. And a loan modification can be a nightmare to even go through that process, honestly. But all it does is it changes the terms of your mortgage that you currently have. More than likely, they change the interest rate, or they reduce the payments, and then just tag on whatever that reduction is to the end of the loan, at the end of the loan term. So it is an option, but it's not like, hey, I need a loan mod. It is an entire process, just as long as a short sale. Deed in lieu of foreclosure. Now, this is also a loss mitigation department thing, but this is where the borrower says, listen, bank, how about we just not go to foreclosure? I'll just give you the property. And that way you don't have to go through the foreclosure process. You get it, and then you can just sell it in REO. Now, you can't just sign a deed and send it to the bank. That's not how it works. There's elements to deeds. One of them is you have to, the owner has to deed the property to so-and-so, and the other person has to accept it. So with a deed in lieu, the lender has to be willing to accept that. A lot of banks don't like those either, but it is a potential option. Bankruptcy, you file for bankruptcy. It doesn't wipe out your mortgage, but it could wipe out other debt that allows you to pay for your mortgage. Because think about it, a lot of people, I mean, over COVID, if you didn't have a job, what did you maybe got the stimulus check, but that wasn't going to fund, everything for you. So a lot of people lived on credit cards. Credit card debt's like through the roof these days. So bankruptcy is not a get out of jail free card. It is not a like, oh, I wrapped up a bunch of debt, I'm going to file bankruptcy. That's not the point of bankruptcy, but it is there a potential tool for someone that really needs help. All right, that's short sale on, no, I just had a short sale approved at 6%. Oh, that is great. Amazing. So good. So, any questions, throw them in the chat box. Like I said, I'll send over this presentation to Consumers First. Please go on the NAR website though. Think about getting certified if you really want to get into it. My other suggestion always is, talk to your broker, like I said, see if they have anything in place. If you have a realtor friend that's already doing short sales, like start working with them, start seeing what they do, ask them questions, get as much information as possible and get that education piece, because it just makes the process go smoother. If you are a buyer's agent and it's a short sale, you need to be 100% clear with your buyer that this could take 60 days. It could take 90. It could take 120 days. It all depends on the short sale negotiation. Hopefully, the lender is on board, but they do. The seller's lender is going to have to approve everything. And that's where it gets tricky as well. So with that, that's all I have. I think Tammy and Michelle are I think Michelle is the one that's going to be sending the stuff over. So you'll have her contact info. Call them, call Consumers First, and they can help you as well. If you need information on what liens are on the property or whatever, use them as a partner. Jesse wrote, I set expectations with the buyer side and seller side with 3 to 6 months to close. It's perfect. That's exactly it. You want to be upfront about it, because if it's now, and I have gone through short sale transactions where the buyer's lender wants to change something, but if you go get it approved by the seller's lender, and it can just become a nightmare. So arm yourself with as much education as possible. With that, everyone have a fantastic Thanksgiving, and we will talk again soon. And if there's any subjects that you want to know more about, reach out to Michelle, reach out to Tammy, and let them know. We can set up more webinars for you guys. All right, everyone, take care and have a great holiday.